Hey traders, so over here we have our Euro Yen, a trade that we took last week. So we bought over here with a limit order and we aim for previous high, which got us into a 1:3 trade, right? So if you were to view this on a weekly time frame, you understand that we have a supply zone over here. You can clearly see this is a supply zone, and when prices are at this area, you are likely to believe that prices will mitigate supply zones over here first before giving us a secondary buyout, right? As in the chances of prices over here turning down to give us a buy zone into this level is much lower. So with this, we know that price projections are likely to move towards this area over here. So we go down to the hourly time frame, we identified an order block over here. You can see clearly this is the last sell to buy move that broke our structure. Came back down, doing what? This is the creation of liquidity, right? You can see, wedge, retail methodology, it's all inside as well. And eventually tap into our 1 hour demand zone. After which, we see a clear break of structure, and over here, we are looking for places to buy. So let me just use the replay. So as prices broke this level, we have a break of structure, and we are looking for places to buy, right? And this is a demand zone as well. And in this case, we actually drop down to the 30 minutes time frame for clearer depiction, and you can see that over here, we actually place our buy limit order here, and prices did break through initially towards this level, and actually got mitigated towards the very last point, right? You see, it clearly didn't break the 30 minute demand zone yet, and instead it taps and left off towards this level. So of course, it moved all the way towards the weekly supply. And for traders who are trading on the lower time frame, you can see that you can catch an even better move, right? You can see inside of this 1 hour demand, we actually highlighted this portion. So inside this 1 hour demand zone, right, we have an unmitigated area on the lower time frame. So let's just go to the lower time frame. So can you see this 3 minutes time frame? We have a sell to buy move. So this is unmitigated, leaving behind imbalances as well, right? And this down move liquidated positions over here. Can you see? All of this has been liquidated, right? Even this last point over here. And if you go to current prices, you can see that prices taps in perfectly. Can you see over here? Prices actually taps in. So we are looking for a move, right? We're looking for a move up. You go down to the lower time frame, you understand that over here, as prices taps into the 3 minutes time frame, 3 minutes demand zone, sorry, you realize that we have a break of structure over here, right? And as well as here. So this is the low that created this is the high that created the low, right? And as prices breaks this level, we are looking for a pullback, right, towards two levels. The first level would be here, and the second level would be here. So it depends on the kind of trader you are. You can actually buy here, stop loss below this zone, or you can actually buy at the very last demand zone and aim for previous high. So both of your targets could be at previous high. So can you see that the first entry over here wouldn't have gotten you at least a 1:1? And for the second entry, it has given you at least a 1:6 already. So you are likely to take partials over here for sure. And knowing that if prices were to break this high over here, we are likely to see an upside move all the way, right? So I'm not saying that you're going to hold your trade all the way, from the bottom towards the end to get a, 1:76. I don't think it works that way, because if you are that good enough to hold your positions for 1:76, then please let me know. Otherwise, you are likely to take partials along the way at the very most, right? You can see that our target is definitely at this level first, and manage your trades accordingly, right?